Hey everybody, this is Jim at SP500chart.com. It is Saturday morning about 10:30, and I'm going to do our weekly review video and looking at what happened on Friday, the 14th. Going to do it on Saturday morning. You know that I feel like I always take a little bit of a risk when I do that because who knows what can happen on the world stage that could affect the markets on Monday. But you know, we're looking at the chart. So the chart isn't going to change between now and the open on Monday. So news be what it is. We're going to look at the technical picture, which is in the chart already. But before we do it, I need to remind you that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, the first thing, if you're a really astute observer, you'll notice that as cluttered as this chart has a tendency to look, I've removed a good number of trend lines. And I've done so simply in the interest of removing some clutter, but also being open to some other possibilities that sometimes if you get a bunch of lines on a chart and you can get somewhat locked in that this is going to happen, and all your lines are kind of drawn with you have to admit to yourself something of a predisposition to be either a bull or a bear. I'm not immune to that. I try to be objective, but I realize really part of the process of being objective is also to realize it's almost impossible to do. So you know, if you've been a member at SP500chart.com since 2010, I started doing the free service and then made it a subscription service in 2011. But if you've been following this for a while, you'll know that I've been pretty much a bull. When others were calling for bearishness back when the S&P was around 1,200 or so, or in the upper 1100s, I would say no. That's not what it looks like here. And the markets, frankly, have even exceeded my expectations back then. But that aside, trying to be objective, okay? First thing, it's only money, but it is something that's important in the world, and I would encourage you to not be. I would encourage you to find what your comfort level is. You know, I'm as I get a little older and amass a little bit more, it's getting a little bit easier for me to absorb risk. And part of the reason is because I realize that if you cannot manage the emotional difficulty of risk, then you really have no business risking anything. Okay, so I know this is a little bit off the topic here, but honest to goodness, where we are in the chart right now, I think there's a lot more risk where we are now than where we were 2 or 3 years ago. And I'm not saying that just because we have hindsight to look back. I'm saying that because back then there were good and solid technical reasons to believe this market was going to run for a while. Now the market has run for a while, and with what I'm seeing here the past few days, we have to sort of look at this and say, well, are we starting to see the worm turn? Possibly, or are we still okay? Are we still going for it? Well, you know, from November of 2012 is where this line has its origin. We can go back. There we go. November of 2012. We have stayed above this line with the exception of about a fraction of a week in early February, at which point we established this new trend line right here. Okay, so we are now looking at the possibility of our inverted, truncated head and shoulders pattern right here. We're on the verge of maybe seeing this pattern fail. I'm not quite comfortable saying it has failed yet. And the reason I'm not quite comfortable is because we do have a number of peaks that are a little bit fuzzy that show there should be support somewhere around where we are. Additionally, we've got that November line, and we've got this line right here. So we may be in for some, if we don't bounce right here, then I think there's a decent chance we may be in for a little bit more of a pullback. And that would kind of be disheartening, because that would mean our inverted, truncated head and shoulders pattern would be one of the very, very rare failures that we've seen. But I'm not making that call yet, okay? Because these peaks that we see here and along here, as well as some of these little dips, these don't line up perfectly. So I'm not quite ready to say, yeah, it's a done deal, the fun's over. And I wouldn't say that really until we got down underneath this blue line that is almost off the chart down here in the low 17, in the around 1720 or the high 17 teens. That's really where we have long-term support. So obviously from the highs where we were up around 1880, we gave up roughly 2% of that during the week. And, I didn't like that. I really would have liked to have seen us continue up, but it just looks like it's not ready to happen. It's just not ready to happen. And we may actually be forming, as nice as this kind of looks like, that kind of shortened inverted head and shoulders pattern that we've been seeing a lot of. And that's got a nice target up there at 1958. I'm not getting rid of that yet. But having now broken down to a technically, well, it's not really technically significant totally, but having gotten underneath this red line right here, you kind of would expect that's a little bit of a warning shot across the bow, because this line had been giving the markets support for almost for a little bit more than a month. That broke down. Now, as we said in the video yesterday, sorry about that, my phone just rang and I lost my train of thought. Really hate it when that happens. And I tell myself when the phone rings, this is what you're saying, remember it. And then I come back after talking to the person and I go, where was I? Well, anyway, basically what I was saying is that I'm not ready to call this a busted pattern quite yet, because we're not totally technically significantly underneath this neckline area, and that neckline area is still a little bit fuzzy. I've done one thing that's a little different here. Since we had some nice peaks that line up over the past 3 or 4 weeks right here, I've gone ahead and created a parallel line to that, just on the outside chance that that we come down a little bit more, that we may bounce at this line or at this line that has been working since November, again with the exception of portions, well, a significant portion of the week of February 3rd. So where do you really start to get concerned and you say, well, the party's over? I don't think you start that until you get down underneath this blue line right here. And here's why I say that. We go to a 3-day chart. This blue line has been a defining line on our major bottom on March 9th, 2009. Again, I believe it was October 3rd of 2011. I remember where I was when that low got put in right there. And the reason I remember was I got stopped out of some stuff on that low, and it really, I didn't like that. I didn't like that at all. I got just barely stopped out. But anyway, then we have another low that's where we started in November of 2012, and so far that line has maintained things. Eventually, it's going to break. And we just hopefully we will see some warning signs, and there's that line again. Well, the warning sign will be it'll break. But what I'm saying is that perhaps the first warning sign is what we're looking at right here. And that is we are underneath this trend line. Even if we draw this like that, under these two little bottoms, we're still underneath that line. And, you know, I would just say at this point, exercise caution. We may be seeing this inverted head and shoulders pattern failing. Again, to keep from getting spooked out of the market, because that's a bad thing too. To keep from getting spooked out of the market, I've put this line right here just in case we come down to that and then we see a sign of a reversal. That would certainly be nice. If we look at things on a 5-minute chart, you can see that that really there's maybe a 10-minute chart will be a little bit better. You can see that we have a series of lows that line up pretty nicely right here. And as a matter of fact, let's make this a light blue color. And as a matter of fact, if we do the old parallel line thing, you can see that we almost have highs that line up here and here. Not exactly. The fact is, we came down hard off of off of about 1874 on Thursday, and then we have given up 34 points, almost 2% in 2 days. We've gone sideways for the better part of a day since that happened. And what I would be doing right now is I would be keeping an eye on this little area of congestion that we've been bouncing around in since about midday on the 13th and all day on the 14th. Because this is either setting up a reversal, which would be signaled by a move back over this red line, and I think it would be even further solidified by a move over this blue line. And just to be on the safe side, I'm going to make this blue line actually touch our two peaks back here. I'm a little circumspect on this one because that was almost set up in the pre-market, if you know what I mean. So let's keep an eye on this little pattern that I'm making in darker blue. If we get up over this on Monday, and if we can rally back and take out this line, then I would say we have seen this I'm going to call this a 1, 2, 3, 4, 5, 6-day sell-off. Okay, so we gap up, and now we've given all of that back. Are we going to bounce here? Here's our neckline to our inverted head and shoulders pattern at about 1845 and change. And here we are about a little bit more than 4 points underneath that. We also have, again, that fuzziness that I talked about. And even this line doesn't totally show how fuzzy that area is. But guys, either this is a reversal and we're congesting here and we're going back and forth before we hop back up out of this, or this is going to end up being a bear flag. And if that is the case, then I would fully expect to come down and make a run down to the 1820s. So, and if that's the case, we got area down here where we could very easily find support. Now, as far as the week went, well, we came into the week really looking like we were in pretty good shape, having been over fairly important short-term lines of support. But when things broke on Tuesday, that really set up what we saw for the rest of the week, and that was just selling pressure. We identified really very few patterns during the week. We saw this little bull flag here, which sadly, though it was a bullish flag, it happened in the midst of a larger bearish picture. So that just shows how you can have little bullish patterns inside of larger bearish moves, and you can have little bear moves inside of larger bearish trends. That's why people talk about the short-term trend, the intermediate trend, and the long-term trend. So right now, I think we are still in a long-term bull trend. I think we're in an intermediate question mark, and right now, certainly short-term, we're in a bear move. Let's see if we can reverse out of that this week. Again, if we get up over this line, then let's see if we have the strength to not only take this out, but also to remove the resistance that this line has created. If we can do that, then I feel that we have every right in the world to keep our 1958 target alive and active. If we come down and we break either one of these two lines right here, then I think we've got to take that 1958 off the board and say, I don't think this time. So guys, look, that's the video, the weekly review for the week ending March 14th, 2014. Let's watch this little pattern coming into the week right here. And then let's watch this larger little kind of channel here. It's got a little bit of a funky shape to it, but let's keep an eye on this as well. And I would say these two lines right here, this line would probably be the defining line for this sell-off has ended. And that would be obviously before this could be taken out, this would be taken out too. So this is kind of like a warning shot getting up over this line, and this is a glancing blow. Once we get over this, then I think we're probably going to head back up. So guys, I hate to be so wishy-washy, but really where we are right now, the pattern that we've been looking at, that inverted head and shoulders pattern, it could be failing. So I just want to keep an eye out for that, and I think you should too. But let's watch these two little patterns here, this tiny one and this slightly larger one, to see if we can get up over some of these lines of resistance. And if we can, I think we're in good shape. So guys, there's your video. Thanks for watching. Take care. And if you're a subscriber to the website, I really do appreciate it. If you're not, think about it. And because the markets, I think we may the average bull market runs about 4.5 years. Actually, about 50. Is it 52 months? It's I think a little bit more than 4 years. And here we are at beginning. We've been in this for 5 solid years, and we're now. We're at the point to where you got to keep statistics in your mind, and the fact is most bull runs don't last much longer than what we've seen. So that's why I'm just kind of looking at the chart with a little bit more open-mindedness to maybe a turn somewhere here at a top. So look, take care. Thanks for watching.